Monetary operations include the purchase and sale of government securities, lending or borrowing against underlying assets as collateral, the acceptance of fixed-term deposits, foreign exchange swaps, and the use of other monetary instruments of the Bangko Sentral to influence the underlying demand and supply conditions for central bank money. The BSP formally adopted an interest rate corridor system as a framework for its monetary operations on June 3, 2016. The IRC is a system for directing short-term market interest rates towards the BSP policy interest rate, which is the overnight reverse repurchase rate. It is made up of two rates: the rate at which the central bank lends the bank, typically an overnight lending rate, and the rate at which it accepts deposits from banks, or deposit rate. In a standard corridor, the lending rate will be higher than the central bank target or policy rate, forming an upper bound for short-term market rates, while the deposit rate will be lower, thereby forming the lower bound.
Before we start on the overnight reverse repurchase, let us recall first what is a repurchase transaction and reverse repurchase transaction. In a repurchase transaction, the BSP buys the bonds or government securities from a bank with a commitment to sell them back. Repurchase, or also called repo in the perspective of BSP, it is buying a bond from the bank and repurchase it on a specified date. Mostly, it is only in a short period of time with an added implicit interest. In here, they expand the money for the economy to circulate more monetary. Conversely, in a reverse repurchase operation, the BSP also acts as the seller of the government securities, and the bank's payment to the BSP has a contractionary effect on liquidity. In reverse repo, in the perspective of banks, they buy bonds from the central banks, wherein the central banks as a seller now. So in result, they contract money for the people to less their spending so that the interest rates will increase. So now, the existing reverse repurchase facility is an overnight facility. So overnight reverse repo is an existing reverse repo wherein BSP has the authority to contract or expand the money circulating in the country and offers full allotment method. To have an idea, full allotment method is when central banks can provide unlimited liquidity or a precondition for controlling markets. So in result, fixed rate and full allotment method will help to ensure that the overnight rate sits close to the BSP policy rate. The next one to be discussed is the table below presents the features of the overnight reverse repurchase facility. The first one is frequency of operations. It is daily or 5 days a week. Then it matures overnight, kaya tawag sa kanya is overnight reverse repurchase. Then next, auction type, fixed rate full allotment. The auction size is based on BSP liquidity forecast. Announcement of auction size, it is weekly. Auction time, it is 5 p.m. but participants can start submitting bids at 4:30, so the auction time window is 30 minutes. Who are the eligible counterparties? These are banks and non-banks with quasi-banking functions. But who are these non-banks with quasi-banking functions? These are the pawn shops, insurance companies, cooperatives, and other financial credit institutions that are regulated by law. Next is type of allocation is prorate based on bid size. The minimum bid amount is 10 million, then the maximum bid amount is 20% of the auction size. The maximum number of bids, it is only one, and the announcement of results or settlements, it is just the same day. So to sum it up, if you still remember the video lecture on the first part, BSP adopts IRC or interest rate corridor to have a guide on short-term market rates toward the BSP policy interest rate, which is they use overnight reverse repurchase agreement or repo rate to manipulate financial system. BSP adopts IRC because IRC will help the BSP ability to guide market interest rate. Next is, it will help limit volatility in short-term interest rate. Next is, banks will be encouraged to borrow and lend in interbank markets, which will in turn strengthen price discovery process, add depth to money markets, and help develop Philippine capital markets in the process. So over time, IRC will allow a reduction in reserve requirements. So now we are enlightened that only BSP has the authority to manipulate our financial system if they want to contract or expand money supply circulating in order to have a liquid financial system in our country. Next is BSP Securities. BSP Securities provides the BSP with greater flexibility in managing the liquidity in the financial system, particularly in the face of large structural liquidity surplus arising from capital flows or additional liquidity released from the reduction in the reserve requirement ratios of banks. Back on the first law, where it was not yet amended, it is only allowed to issue debt securities when there were extraordinary movements in price levels. But on the new enhanced law based on Republic Act No. 11211 or the new Central Bank Act, BSP's authority can now issue debt securities freely without exception. There are two types of BSP securities that they issue. First one is BSP bills. It is for short term. Next is BSP bonds for long term. The BSP will initially offer BSP bills first in view of the prevailing market preference for shorter tenors. Why are BSP securities important? The first one is additional monetary instrument. We all know BSP securities is also a monetary instrument to guide short-term market interest rate toward the policy rate. Next one is tool for liquidity management operations. In order to influence or manage liquidity in the financial system, particularly those arising from large structural liquidity surplus due to capital flows or additional liquidity released from the reduction in the reserve requirements ratios of banks. Third one is serves as an additional short-term monetary policy tool used by the BSP. Just like the term deposit facility, the overnight reverse repurchase facility, the overnight deposit facility, and the overnight lending facility, because it helps manage liquidity in the financial system. Next one is supports the BSP's initiative, because it is to shift to more market-based monetary operations and allow the BSP to conduct monetary operations in line with international central bank practices. Next one, it is enhance the development of the local bond market because it is an addition to the pool of risk-free assets in the financial system alongside the securities issued by the national government. Lastly, it contributes to improve price discovery for debt instruments. It supports the monetary policy transmission through the regular auction of BSP securities. So next, let us differentiate the BSP securities and the Bureau of Treasury issued securities. It is simply government securities are issued by the national government through Bureau of Treasury issued securities for funding requirements, while BSP securities are issued by the central bank, which is the BSP, as monetary instrument for liquidity management in the financial system. So next is, what are the tenors of the BSP securities? Tenors means the period given by the creditor to the debtor in paying installments. In BSP bills, they are given 28 days for initial issuance, kaya siya short term, and it covers the short segment of the yield curve. While BSP bonds, it has longer maturities and offered only when there is excess liquidity. It simply implies that the longer the tenor, the longer it matures, and the shorter tenors means shorter time of maturity. That's why BSP is initially offered BSP bills in view of the prevailing market preference for shorter tenors. How does the BSP issue the BSP securities? The BSP securities is offered via auction wherein eligible counterparties have to submit their bids on the securities being offered. A multiple price auction format is used for BSP bills and a uniform price format is adapted for the original issuance of BSP bonds. The auction of BSP securities is conducted via the BSP's monetary operation system, through which market participants submit their bids within a given time window. The BSP's OMO auction subcommittee determines the allocation and is being done via the monetary operation system. The National Registry of Scripless Securities of the Bureau of the Treasury serves as the registry of the successfully awarded BSP securities. The National Registry of Scripless Securities ensures delivery versus payment, both primary and secondary market, by triggering the settlement of the peso leg in PhilPAS after it receives the instruction to deliver the BSP securities the banks of National Registry of Scripless Securities accounts. Meanwhile, the secondary market trading of BSP securities is being done on the designated trading platform of the Philippine Dealing and Exchange Corporation. To summarize the key features of BSP securities, here is the table. Type of securities that BSP can issue. Number 1, BSP bills. Number 2, BSP bonds. Tenors, 28 days for bills, and for bonds is no limit on tenor, conditional on market preference and liquidity conditions. Auction size, it is determined based on liquidity forecast. The frequency of auction is every weekly or as necessary depending on market demand and conditions as well as latest liquidity forecast. The day of auction is every Friday. The settlement of issuance is additional 2 business days for primary issuance and additional 1 business day for secondary market transaction. Who are the eligible counterparties that can participate in the auction of BSP securities? BSP securities is currently limited to the existing BSP counterparties in the term deposit facility. The further expansion of BSP counterparties may be considered at a later phase. While banks and trust entities can participate in the secondary market trading. Sell down to banks, retail, and institutional clients is not allowed. Funds from non-resident sources are not allowed to be placed in BSP securities. The auction format: multiple price for BSP bills and uniform price for BSP bonds. Discretion on allocation: yes, that is with bid acceptance and bid rejection regions. Based on anti-concerning rules, yes, each bidder can only bid up to 20% of total offer size. Buyback operations: yes, BSP may call for early redemption of issued securities and this will be done via auction. Eligibility as collateral: not acceptable as collateral in the BSP's overnight lending facility and other BSP liquidity facilities. And lastly, eligibility for regulatory compliance. BSP securities are considered high-quality liquid assets for the computation of liquid coverage ratio, net stable funding ratio, and minimum liquidity ratio. So in conclusion, BSP securities provides another monetary tool for liquidity management under interest corridor that is more flexible and market-friendly, and it will support the development of the domestic bond market.
So, magre-recap lang po tayo ng konti sa ating previous lesson. On the right side of the displayed diagram is the structure of the BSP's Interest Rate Corridor System or IRC system. The upper and lower borders of the corridor are formed respectively by the interest rates on the standing overnight lending and deposit facilities, with the policy rate in the center. The two standing facilities interest rates, which serve as the corridor's upper and lower boundaries, have been set at a distance of about 50 basis points from the target policy rate. And here are the following revisions. 1. A standing overnight lending facility or OLF was implemented in place of the RP facility. Second, the RRP facility was modified to become an overnight RRP with a set price that is equal to the policy rate. And third, a standing overnight deposit facility or OTF and the special deposit account or SDA term facility were replaced by TDF based on auctions. The BSP maintained the same list of qualified counterparties for the facilities under the IRC system to enable a smooth transition. Banks and non-banks with quasi-banking functions are eligible counterparties for the RRP facility and the OLF. Banks and BQBs and trust companies are among the qualifying counterparties for the TDF and ODF. Meanwhile, the BSP's facilities for monetary operation should continue to forbid the use of non-resident funds. The prohibition on banks and quasi-banks selling, discounting, assigning, or negotiating their clients with or without recourse basis. Credit rights in TDF, ODF, and RRP with the BSP shall be upheld at the same time. Let us first define what is TDF since kanina pa ito ibinabanggit. The term deposit facility or TDF is a key liquidity absorption facility commonly used by central banks for liquidity management. Ito yung hindi kaya ng BSP na maglabas or mag-issue ng sarili nitong debt instruments, except in cases of extraordinary movement in price levels under Republic Act 7653. Bago tayo mag-proceed, ano ba yung mga extraordinary movement in price levels under RA 7653? Ito yung mga reports and publications, makikita ito sa mga general balance sheets showing the volume and compositions ng mga asset and liabilities ng BSP. Ito yung iba na yung price ng mga assets, liabilities, etc. compare dun sa theoretical price due to outside factors like market and demand. TDF is entrusted with withdrawing a significant or malaking portion ng mga structural liquidity surplus galing sa financial system. At ang purpose nito is to bring market rates closer to the BSP policy rate. Para makapag-withdraw sila, magkakaroon ng term deposit auction. The BSP offers 3 tenors, 7 days, 14 days, and 28 days in its weekly term deposit auction. The TDF is operated using a variable rate multiple price tender or English auction. Sa madaling salita, ang term deposit facility ay ginawa para mapadali ang pag-implement ng monetary policy by giving depository institutions a tool para makontrol ang kabuuan ng stocks para sa liquidity. By utilizing the TDF and RRP facilities, ang active monetary operations kagaya ng sabi ko kanina sa purpose ng TDF ay ginagamit para mapalapit ang market rate na nasa loob ng corridor sa BSP policy or target rate. Active monetary operations have the key advantage that the amount of operations can be changed according to how much liquidity is needed to be withdrawn or injected to ensure the market rates move in line with the policy rate. In principle, larger and more frequent operations can be undertaken depende sa demand or kailangan ng market. However, the BSP decided to begin with moderate auction volumes in order to avoid any unnecessary tightening of liquidity conditions and to make sure that counterparties are adequate ready to switch to the new operational framework. Let's proceed to standing liquidity facility. Qualified counterparties, ito yung banks and BQBs and trust companies kagaya ng sabi ko kanina, have demand access to the Standing Overnight Liquidity Facility. Although the overnight loan facility, which is equal to the RP in the old system, is not technically volume limited. In reality, nakadepende pa rin ito sa available na collateral na hawak ng mga counterparties ni BSP. In the meantime, the capacity of the overnight deposit facility is also limitless to help absorb any remaining system liquidity and prevent market rates from dropping below the corridor. Sa madaling salita, ang standing liquidity facility, may it be lending or deposit, na ino-offer ng BSP ay para matulungan yung mga counterparties na i-adjust yung liquidity nila at the end of the day.
What is rediscounting? Rediscounting is a privilege of a qualified Bangko Sentral ng Pilipinas or the BSP supervised bank that have approved an active rediscounting line with the BSP to obtain loans or advances from the BSP using the eligible papers of its end-user borrowers or the EUBs as collaterals. It is a standing credit facility to help banks meet the temporary liquidity needs by refinancing the loans they extend to their clients. Rediscounts is the act of discounting a short-term negotiable debt instrument. Banks may rediscount the short-term debt securities to assist the movement of the market that has high demand for loans. When there is a low liquidity in the market, banks can generate cash by rediscounting short-term securities. Rediscount is a way of providing financing to a bank or other financial institution, especially in the 19th century and early 20th century. Banks made loans for their customers by discounting the customer's note. The note is a paper document in a specified form, where the borrower promises to repay a certain amount at a specified date. Let's say the customer wants to borrow a 1,000 pesos. The bank may ask him to sign a note promising to repay a 1,100 in 1 year. The bank is discounting the note by paying less than the 1,100 face amount. The extra 100 is of course the bank's compensation for paying before the notes mature. The Federal Reserve systems could provide financing by rediscounting this note. Maybe the Fed would give the bank a 1,050 for the note. Next is, how does the rediscounting cycle go? A bank extends loans to EUBs who execute credit instruments like promissory notes, drafts, or bills of exchange in favor of the bank. The bank rediscounts the credit instrument of its EUBs by endorsing the same in favor of the BSP. The BSP in turn lends the bank an amount equivalent to a certain percentage of the face amount over the outstanding balance of the EUB's credit instrument. Next is, what is the role of rediscounting in our monetary system? Under Section 81 of the Republic Act No. 7653 as amended by Republic Act No. 11211, otherwise known as the New Central Bank Act, states that the discount, loans and advances which BSP is authorized to extend to banking institutions shall be used to influence the volume of credit consistent with its objective of price stability and maintenance of financial stability. The BSP uses its rediscount facility as an instrument to influence the volume of credit in the financial system and to act as the first, short-term safety valve for the banking system when the aggregate supply for reserves falls short of demand, or when banking institutions meet an unexpected shortage of reserves or funding for their temporary liquidity needs. The rediscounting window does not aim to compete with the existing rediscounting facilities in the market. Next is, what is an overdraft credit line? Overdraft credit line, or OCL, is available to banks participating directly in the clearing operations of the Philippine Clearinghouse Corporation to cover shortfalls in the bank's demand deposits accounts with the BSP arising from clearing operations. PCHC provides check clearing services covering 69 geographical regions, processing a daily average of 704,000 clearing items from more than 9,000 participating banks branches nationwide. The clearing in the banking system is the process of settling transactions between the banks. The BSP imposes a ceiling on the amount of overdraft a bank may incur due to failure to cover clearing losses through interbank borrowings and/or repurchases agreement with the BSP. The ceiling is defined as the sum of clean OCL equivalent to 15% of the bank rediscounting line with BSP and the collateralized OCL that will be extended by the BSP. The mechanics of OCL are governed by Section 802 and Appendix 25 of the Manual of Regulation for Banks. So, in all, the overdraft credit line is one of the monetary tools of the BSP or the Bangko Sentral of the Pilipinas to regulate the level of liquidity in the financial system.
So now let's move on to emergency loans or advances to banking institutions. So the emergency loan or advance to banking institutions is governed by the provisions of sections 84 to 88 of the Republic Act number 7653, otherwise known as the New Central Bank Act. So what is the nature of emergency loans or advances? So an emergency loan or advance is a credit facility that is intended to assist a bank experiencing serious liquidity problems arising from causes not attributable to or beyond the control of the bank management. So sabi dito is credit facility. So they are pre-approved loan which allows the borrower to borrow money on an ongoing basis over an extended period of time. So in this case, the borrower are the banks and other financial institutions, while the lender is the Bangko Sentral ng Pilipinas. And the BSP doesn't easily grant you with an emergency loan. So, madaming process, maraming requirements ang pagdadaanan, at syempre dadaan yan sa monetary board. So, it is only intended for those who experience liquidity crisis that are uncontrolled, okay? That are beyond the control of the bank. The grant of such facility is discretionary upon the monetary board. So sabi ko nga kanina, nadadaan yan sa monetary board, and it is intended only as a temporary remedial measure to help a solvent bank overcome serious liquidity problems. And as provided under sections 84 to 88 of the Republic Act number 7653, no emergency loan or advance may be granted except on a fully secured basis, and the monetary board may prescribe additional conditions, which the borrowing banks must satisfy in order to have access to the credit facility of the Bangko Sentral. So sabi ko nga na hindi basta-basta mag-grant ng emergency loan ng BSP. So marami pa yung ibibigay na conditions, na qualifications at requirements. When an emergency loan or advance may be availed of. First, in periods of national and local emergency. So here, emergency na talaga siya since it concerns the national and local, or of imminent financial panic which directly threaten monetary and banking stability, and that is situations involving bank runs. So a bank run occurs when a large number of customers of a bank or other financial institution withdraw their deposits simultaneously over concerns of the bank's solvency. So, eto yung sabay-sabay na pag-withdraw ng mga customer ng isang bangko sa kanilang mga deposit dahil nga sa status ng isang bank. Next, massive movements by depositors of their funds from a certain bank to other banks. Bank holidays, and voluntary cessation of business. So a voluntary cessation is when a business owner has chosen to close the business due to conditions within the business owner's power. So dito, yung business owner na talaga yung nag-decide na i-close yung business niya. Or when there are movements which endanger the economy. So eto, about na to sa economy natin. So, di na talaga. Or when the international stability of peso is threatened, or when there is an exchange crisis. Next, during normal periods for the purpose of assisting a bank in a precarious financial condition or under serious financial pressures brought about unforeseen events or events which, though foreseeable, it cannot be prevented by the bank concerned. And dito naman yung unforeseen events, and kung foreseeable naman siya, it is beyond the control of the bank. So, wala na talagang magagawa dahil nga it cannot be prevented.